Hey, Alec. Hey, Noah. Dr. Murphy. What East? How are you guys doing?
Hey, good. How you doing?
Hey
I'll
everyone.
just get in a
Hey,
post together on my end.
Yeah, doing great.
hey Dhruv, I invited you to speak. If perfect. Um, all right. Um, Hello everyone. We'll get started in a couple minutes. We'll just wait for some people to join. But great show today, featuring the CEO of Arch Lending, Dhruv Patel, as well as our own Dr. Robert Murphy and lawyer Darif. And as we're waiting for people to come in, Bob, did you want to share some about what we're doing with the on-chain lending with whole life insurance?
Yeah, sure thing. So thanks everybody who's trickling in here. Real briefly, so what we're doing here at Infineo is, among other things, we're centralizing whole life insurance policies, and they naturally, by their very construction, have an inbuilt collateral lending feature where basically you can say to the carrier, hey, my cash value is whatever, $10,000 right now. I'd like a $9,000 loan. And the carrier advances the loan with the policy as the underlying collateral. So among other things, what we're trying to do to bring more value to our clients, for people who have policies like that and they register with us, we can streamline that process, because depending on the carrier, the actual process of applying for a loan and then the money getting into your checking account, it can take a while, depending on, sometimes it's real snappy, but other times, it can take a bit. And especially if you're managing multiple policies, or if you're an institutional investor and you have some of these policies as an asset class, for people like that, having to actually go through the logistics of per policy, getting 1,000 here, getting 2,000 there, and so forth, can be cumbersome. So that's one of the things we're doing, is streamlining all that, and then also connecting it to outside lenders who appreciate the collateral and understand the safety and security of using these life insurance policies as the underlying collateral against which to lend. And so offering value to those people as well, giving them exposure. So somebody who would like to lend against policies like that right now, if they try to do it on their own, just there's a coordination problem. They couldn't find people with the policies. It would be too cumbersome. But again, if we're like a central clearinghouse, ultimately that's one of the things we're going to be doing, is just connecting these so they can fight each other, and we'll just be in the middle managing those flows. And of course, all this is going to be happening on the blockchain for transparency and just to make sure everything operates smoothly. So that's just interesting that we're interested in this general topic, but we at Infineo are very interested specifically in these matters, because this is what we're going to be building in 2024. Okay, I'll stop there. Thanks, guys.
Perfect. So now that some people have come in, we'd love to introduce our guest, who is Dhruv Patel from Arch Lending, CEO and co-founder. Dhruv is started this company in February of 2022. Prior to that, Dhruv joined Brex as an early employee, where he held various roles in capital markets, credit, and operations from March 2019 to January 2022. Dhruv's earlier experiences includes working as an investment engineer at Bridgewater Associates from August 2017 to October 2018. Dhruv holds a bachelor's degree in business administration from the University of California, Berkeley, Haas School of Business. Dhruv also holds a bachelor's degree in computer science from the University of California, Berkeley. And prior to his education, Dhruv attended St. Francis High School. So really great to have you on, Dhruv. And I'll turn it over to you in a minute to give a further introduction on yourself. Also, as guests, frequent guests, we have Dr. Robert Murphy, the chief economist at Infineo, as well as our general counsel, lawyer Darif. So really excited to talk to you guys today. I'm Alec Beckman. I'm your host, joined by my co-hosts Noah Pollock and Jackson Blau. So Dhruv, would you like to add on to what I said, even though it was a pretty lengthy introduction? Would love for you to tell the audience about who you are.
Yeah, thanks for that, Alec. Your introduction was quite exhaustive, but I think the additions that add on is, I've sort of built my career at the intersection of fintech and financial services, and sort of saw repetitively throughout the sort of difficulty of accessing traditional financial services when your portfolio has more and more of what I call alternative assets, whether that's crypto, whether that's equity in private tech startups or private businesses, than traditional stocks and bonds. And so that was the genesis behind Arch, was to build the next generation wealth management private banking business for people with alternative assets. And I'll sort of pause there, and happy to dive deeper into any of those segments.
Perfect. Yeah. So I think I think what we want to know is, can you tell us about Arch Lending and how it started?
Yeah, I think the genesis of it was essentially from my own personal experience of going to a bank asking for a mortgage at the time when I had Bitcoin and equity in the tech startup, and the bank actually didn't understand those as assets. So the only way to do it was to sell, both of those respectively. And I think for most people that's just a sort of catch-22. These assets appreciate over time, and so you want to continue to hold them. But you sort of have to sell them to make other advances in your financial life. And so we started the business in February of 2022, as you mentioned, with this vision of being the next generation wealth management private banking company for alternative asset holders. Since then, we raised venture capital money from Castle Island Ventures, Tribe Capital, and a handful of other folks. And in January of this year, we publicly launched our first product, which was lending backed by cryptocurrencies, namely Bitcoin and Ethereum. And that product's been growing extremely well. Then we launched another lending product in June, which allowed individuals at early tech startups that have since gone on successful, like Stripe, Databricks, Rippling, that are closer to IPO, to borrow against their shares in the company. And then 3 weeks ago, we launched a deposits product, which allows accredited investors and individuals in the U.S. and broadly to get access to BitGo qualified custody for essentially no cost. And so for us, we continually want to expand and provide additional financial services and products to our customers, and are continuing to grow with them as they progress financially.
That's incredible, Dhruv. And I actually really, really resonate with that. I hold some early startup equity myself, and there really is nothing you can do besides sell it. And that's if you can even sell it. So I love how you're focusing on those later stage startups that are closer to IPO with that new product. But I'd love if you could talk about how loans are actually underwritten and originated on Arch. That'd be
Yeah. So maybe I can focus in on the crypto side, just given the theme of the conversation here. But the way we work is it's all over collateralized. And so customers come to our website, we can create an account. They go through the KYC process, which takes anywhere from 1 to 2 minutes. And then you really start to configure your loan, which is you decide which asset you want to use as collateral, whether it's Bitcoin or Ethereum, how much of a loan amount you want, and respectively will tell you how much of the collateral you'll need. So for example, if you want a $65,000 loan amount, you currently need just over $100,000 of Bitcoin or Ethereum respectively. We custody assets at BitGo. And so after you configure your loan, you electronically sign the loan documents, and then you send over your assets to an address that we specify at BitGo, and we disperse the loan to you immediately, either in USDC to a wallet or exchange of your choosing, or dollars fiat wired into a bank account of yours. And, as the loan sort of continues, you make your monthly payments, which are interest only or amortizing, depending on the loan structure that you picked. But as you make your monthly payments, we sort of continue to do your loan monitoring in real time and show you what the value of your assets are, as well as what the loan health looks like. If you need to deposit additional collateral in what's traditionally known as a margin call, as well as the second you pay off your loan, your crypto gets sent back to you at the address that you specified. And so that's sort of how our over-collateralized lending product works. I think the key differences that set us apart from other folks that may have done this before or currently do this is we don't rehypothecate customer assets. And so what that means is we're not taking customer funds and sending them to other protocols or other folks to earn extra yield on them. That's not our business model, and that's really why customers trust us. The second is we do only over-collateralized lending against blue chip tokens, namely Bitcoin and Ethereum. We're not touching illiquid altcoins or meme coins, if you will, and we don't do uncollateralized lending. And so I think for us, again, that just gains customer trust, knowing that we're not engaging in risky activity that could potentially, impact the business. And then lastly is just our focus on regulatory and legal compliance, which is why we do KYC. We operate live in 33 U.S. states, and we're working towards the remaining right now. But really making sure we operate in a legal framework that is compliant with the U.S.
That's really interesting. I was wondering about the what states you were in, what your growth plans were. But going kind of more on the crypto side again, I was wondering with the current market sentiment kind of turning around, I was wondering if you've seen a big increase in loan applications.
Yeah, I mean, starting I would say mid-October, demand has been through the roof. Our team is working 24/7 just to sort of keep up with existing demand, and frankly, we're a little underwater right now. And I think it's a few things. One, there's still massive demand for this product, but in the US specifically, for individuals, there's really only us and one other company that do it. And so there's more than the two of us could fulfill individually. The second is, as you see Bitcoin and ETH pricing and really broader crypto pricing go up, borrowing tends to correlate. And the last is sort of people are seeing that like, okay, there's a good chance of ETF approval early next year, which will further sort of boost pricing, and they want to borrow against assets instead of sell. And so I think all three of these are sort of driving a big uptick in demand at this moment, and we expect that to continue throughout next year as well.
It's definitely exciting, especially considering you guys started this in a bear market. So this will really be your first Super Bowl to get you guys going. On top of that, I was also wondering what else in the crypto blockchain space really excites you past lending?
Yeah, I think there's a lot of interesting things going on with RWAs on chain. I think like the first two use cases there were just stable coins, bringing the dollar on chain, and then treasuries. There's been many folks that allow people on chain to get access to US treasuries. But I see that trend sort of continuing. And I think for me, the exciting piece is, okay, like what's the sort of benefit of bringing these assets on chain? For some, I honestly haven't been able to come up with it, but there are many, such as what you all are doing in the life insurance space, where you can provide additional sort of liquidity or just enable that asset class to be accessible to a wider range of individuals. And so for us, as a lending business that operates in digital assets, as new and new asset classes come on chain, you could think of us as potentially like providing a lending market against them and allowing individuals to borrow against broader holdings.
That's really cool. I was wondering, hey, so I'm lawyer.eth. Just a quick question. You were mentioning the states you've been at. Like, are there any states that stand out as much more receptive and easier to navigate? And are there any that are just like way too hard to even bother?
So I'd say like there's a handful that are more lenient from the lending side, where they allow lenders to sort of go through the process quicker. Missouri is one of them, where the registration with the state to be a consumer lender is quite seamless. Some of the harder ones, California is notably hard. I would say it's not the case where they're completely resistant. It's just a longer process. And so for us, we're not live in California yet, but expect to be so by the end of the first half of next year. It's just, it takes a few months to put the application together. Then they go through the review process, and then, some additional back and forth before they approve you as a licensed lender.
Okay, so there's nothing about your model that makes it like impossible in any given state.
Yeah, that's right. Mainly like, we qualify as a consumer or commercial lender, depending on whether our customer is a business or individual. But those have been around for a long time. And so there's a pretty defined regulatory framework for which we operate in.
Okay, that makes sense. Cool, very close. Thank you.
Perfect. So one other question that I had for you, Dhruv, is can you talk around the compliance with Arch and who are the investors on the platform?
Yeah. So for us, like that, the compliance piece is key, from everything to doing KYC, KYB checks on our customers, which are like know your customer, know your business, to conducting AML, anti-money laundering checks as well on the back end. And lastly, like only operating in the states that we're allowed to operate in, and then working with the specific states to get approval on the rest. With respect to the sort of investors on our platform, I can talk through like specific borrowers and then who our investors are. I'd say the types of folks that have borrowed from us and are current customers of ours are quite wide ranging. We have folks all over the country from Arkansas, Texas, New York, Iowa, I believe, and many other states. And I think the common trend that people are that at least I'm seeing across our customers is they're borrowing for at least 4 different use cases. One is other investments, whether it's home renovations, putting a down payment on a house, or diversifying into stocks, or even sometimes buying additional crypto. The second is to handle any larger expenses that have come up unexpectedly, like a large healthcare bill or a tax bill. The third is debt consolidation. Some folks may have debt outstanding at slightly higher interest rates, and for them, they're financially savvy. They're able to borrow against other assets to reduce their interest expenses. And then the last is, I'd say there's a set of folks that are more so like asset rich, cash poor, if you will. And so they're consistently borrowing from time to time to handle anything that comes up in their life. And so that's, a little bit about the sort of borrower profile and folks that we have on our platform. With respect to our investors, You can find this on our website, but as the equity investors, we have Castle Island Ventures, Tribe Capital, and a handful of other venture capital firms that operate in crypto and fintech. And to continue with the debt product, we've tied up with a hedge fund and a credit fund, and we continually raise debt to keep the lending growth going.
That's all really, really interesting, Dhruv. And I love how you touched on the different use cases for the assets, investments, debt, consolidation, and just other unexpected expenses. And just with the rise of cryptocurrency, I'm sure that this has really become prominent over the last couple of years and just last bull cycle. And so I've heard you mention Bitcoin and Ethereum, and you mentioned startup equity. Are there any other assets that you're looking to explore?
Yeah, for us, I think we're always interested in seeing what other assets our customers have that we'd be able to support them with, or where we see net new demand. I think other illiquid assets that we've looked at are more like if you have an ownership stake in a fund, whether it's a hedge fund, a private equity fund, a venture capital fund, things of that sort. It's a little longer down the roadmap, but for us immediately, the near-term focus will continue on crypto and equity in private businesses.
Do you see any potential in the tokenization of real-world asset space to use tokenized real-world assets as collateral?
Yeah, certainly. I think there's a lot of people doing exciting work bringing different assets on chain. I think we're certainly like keeping up the tabs with different teams building here and seeing how the traction plays out to then decide, okay, where do we think there will be lending demand to work together to enable that?
That's great, Dhruv. And what would it take for some of these real world asset plays and some of these assets that have already been tokenized? What would it take to work with Arch Lending to integrate? How does your underwriting process work for that, and so on?
Yeah, I think we'd have to have a conversation with the team building it to just understand the nuances of, okay, let's say we transfer the asset as custody during the loan, and the borrower decides to stop paying. What does it look like to liquidate? Liquid are these assets on the other side? How does title transfer work if, for example, the underlying asset is a real world real estate or something else? And we just want to make sure that we have all of our sort of risks understood and outlined and addressed before we continue with, okay, what would the LTV or loan amount look like and things of that sort.
Great. And I'm really happy to hear you guys are keeping tabs on the space, because I personally think that collateralized lending in the tokenized real world asset space is one of the things that we're really missing and that's needed. And I'm just curious, you do have any opinions on what we need for mainstream adoption in the real world asset and blockchain space?
Yeah, I think you all will probably have a better response to this than me, or at least a more thought through one. For me, the things that seem to be there are just more legal frameworks. So for example, when you're tokenizing real estate, if there's a way for me to prove that, okay, I have this token, this means that I have ownership in XYZ property. I'm not sure if you can go to a government entity or things of that sort and just have them accept that. They probably get more questions than answers. And so I think having more of a legal framework around how these things operate would certainly be helpful.
Dhruv, speaking of adoption and some of the things to get into the space, can you talk about Arch, how Arch is designed from a user perspective in terms of, is it something that's limited to people that are familiar with Web3? Is it something that you're trying to open up to Web2? Obviously, you have a focus with on-chain to cryptos, but even some people, who are in the crypto world don't hold their own keys. And so just try to understand the user experience and the ease of use.
Yeah, our platform is designed really for both Web2 and Web3 folks. You can think of the experience as no different than a Coinbase or Robinhood, where you can quickly go online, create an account. You don't need a specific wallet, but you do need to have crypto previously, just given the fact that it's an over-collateralized loan. That being said, we do have products that allow you to essentially onboard and buy crypto via our platform. And so I think for us, it's our customer base is wider than just the folks that are very well versed in crypto and have experience with DeFi and the likes, and the user experience reflects that.
Yeah, that makes a lot of sense. I know you mentioned over collateralization, but I was also wondering, given the volatility like, say Bitcoin does drop 50% or Ethereum, whatever, like, how does Arch Lending manage the risk associated with, crypto-backed loans?
Yeah, so essentially we do real-time and live monitoring and show this to all of our customers on their dashboards when they take out a loan with us. So if we just walk through one illustrative loan, like let's say the loan to value is 65%, which means if you take out a $65,000 loan, you've sent us $100,000 of Bitcoin. As the value of that Bitcoin decreases, we start to give you notifications saying, hey, your loan could be at risk of a margin call. You may want to consider adding additional collateral or paying down the loan partially to bring your loan health back. If the loan LTV reaches 75%, we automatically issue a margin call, which gives our customers 24 hours to either deposit additional collateral or partially pay down the loan. And if they don't, then we'll start to liquidate their collateral. And if the loan LTV hits 85%, then we hit an auto liquidation state where we automatically sell the collateral, pay back the loan, and return any excess amount back to the borrower. And so that's how we manage risk on our side. I think it's quite standard amongst industry practices and very analogous to stock-based lending for folks that are comfortable, sort of familiar with that world.
Yeah, that makes sense too. I guess there's not really a better way to do it. I guess, although the market has been doing well, have you seen, many liquidations recently, or how's that been going? And are your clients overall happy with the process?
Yeah, for us, we provide a white glove customer service. And so the whole team is really accessible to customers. They can message us, schedule calls with us, things of that sort. And so we definitely err on the side of over communication. And as a result, have had only positive experiences with customers. Right now, there aren't many liquidations going on. As you can imagine, asset prices are just sort of increasing. And so we actually have the opposite, where customers are requesting to increase their loan amount or to borrow additional amounts. But we haven't had to liquidate in the last, call it like 2 months or so, just given asset pricing has only gone up.
How does that work with when asset prices are rising and people wanted more loans against like collateral? Do they have to put down more collateral, or because of the increased asset price, they can now take out more loans?
Yes,
or more.
Yeah, it's a lateral. Think of it as like a home equity line of credit in that respect, right? Like as the value of your home goes up, you can always draw down additional like sort of debt against it. And so this is the same. Like as the value of your Bitcoin goes up, we can just increase your loan amount and send you additional loan.
Dhruv, where do you see the crypto lending industry heading in the next 5 to 10 years? And how do you see Arch lending play in shaping that future?
Yeah, I think you see a lot more like just transparency amongst lenders, and we're sort of working that way with proof of reserves and other things down the pipeline, as well as sort of broader asset classes being supported. Right now, I think people are borrowing mainly against like Bitcoin, Ethereum, and other tokens. But as you start seeing other types of asset classes being tokenized, like stocks, treasuries, and even more so down the line, you start to see sort of lending markets develop to match those asset classes. And I think what's really interesting is you might get to a world in like the next 5-10 years where you can take out like single loans against a variety of your assets. So you can go to a lender and say, I have Bitcoin, I have Ethereum, but I also have like a tokenized version of treasuries, stock, and all these other things. And you can take out like a single loan against your portfolio, which I think is a pretty exciting spot to be in.
That's great. And then in terms of like comparing this to CeFi or centralized finance, like how do you see this more instantaneous loan available to more assets, driving people in from different industries more on the traditional side?
Yeah, I think essentially this, like for us, we are a centralized company, but we're able to do this instantaneously, just given how we're built and using like, stablecoin infrastructure. For example, like wires and ACHs move much slower than sort of blockchain transfer via stablecoins. And so I think you see maybe more and more people adopt that as a payment rail, just given the transparency, it's more real time, things of that sort.
Great. And then the infrastructure that you built on Arch, how has it been impacted by, more traditional finance? And then additionally, like how have your rails been impacted by what's available in the DeFi space?
Yeah, I would say we operate in a mix of traditional finance and Web3. And so our customers can pay us back using ACH or wire. We can send you a loan using ACH or wire as well. but you can also pay us back via stablecoins, and we can disperse a loan in stablecoins also. So I'd say we're interoperable. Just given many of our customers actually earn like a salary in dollars in the bank account, and that's still their primary source of funds where they have their money. And so for us, I think at least we see ourselves there at least in the foreseeable future. With respect to DeFi, I think for us, again, similar. You could like DeFi markets exist for lending, but I think for us, the use of the sort of experience and usability of the platform is one benefit, as well as the ability for people to actually get dollars and serve as an off ramp is another. Just given the use cases that people have.
Awesome. And then in terms of what you are accepting as collateral today from the crypto side, are you planning to launch other cryptocurrencies? I guess that's also a question about, how stable they are. But what's your plan for that? And, to diversify the range of accepted crypto assets?
Yeah, we're certainly looking at other sorts of tokens that we could accept. For us, we go through a very rigorous underwriting process, looking at all the historical data, looking at its volatility over various timeframes, whether that's last 30 days, last year, rolling 12 months, year to date, inception. We look at the market cap over the same sort of timeframes, as well as the 24-hour liquidity and even hourly liquidity, just to understand, how liquid is this asset? How volatile is it? Do we feel comfortable accepting it as collateral? Right now, as I mentioned, the main two that we support are Bitcoin and Ethereum. We do support I think one or two other tokens and are looking to expand that, but also I think customer demand needs to match. And so for us, we allow our existing customers as well as new customers to go to our website and request additional tokens. And we use that as feedback into seeing, where else is there demand for, so that we should potentially look into trying to accept it as collateral.
So not to put you too on the spot, Dhruv, but I'm really interested, just with all the current market sentiment, everyone's got their favorites. I mean, I'm not a Bitcoin maxi, but I love traditional Bitcoin. So I love that you already have it. And if I had to pick an asset that wasn't already on your platform, it would probably be Algo. I really am impressed by their chain. And so if you had to pick one crypto asset, what would you like to see on Arch next?
I think for us, things that are interesting are liquid staked tokens. So for example, liquid staked Ethereum, that there's an interesting sort of use case there of your collateral is continuing to earn yield while you've locked it up for a loan. And that yield actually can be used to pay off interest income. And so for us, I think that's a really exciting area to explore, just given the economics, and it almost makes the loan free from the customer side. So liquid stake tokens is what I would say are interesting for us to try to accept.
That's awesome. And I think one thing, Dhruv, how it relates to Infineo in that sense, from what you mentioned about your collateral continuing to grow, with whole life insurance, there's typically a dividend between 4 to, let's call it 6%, that grows over time. And one of the really cool features of policy loans that grow like that is the collateral is always growing and almost staying on pace with the interest. So in terms of those liquid stake tokens, would love to kind of understand, is that something where it could potentially even outpace the interest on the loan, or do you ever see that as being possible, or is that something that you think the collateral will always grow at a slower rate?
No, it's certainly possible. I think staking yields vary, and it also depends on the over collateralization ratio. So as a simple example, right, let's say the loan interest is 10%. You took out a $50K loan, and so that means you sent us $100K of Ethereum, and let's say that's been staked, right? So you owe, and this is a 1-year loan for this hypothetical. So you owe 10% on the $50K in interest, right? So that's $5K of interest expenses. And of your $100K of Ethereum that's been staked, if the staking yield is 5% or more, essentially you've offset your interest income. And so I think there's certainly worlds in which that can happen or even grow faster. But it's sort of hard to say for sure, just because staking yields are outside of Arch's control, and those are variable.
Great. And then so kind of shifting gears here, you mentioned some around the regulation with different states and how different states differ depending on what's available for a loan. Are there any plans for Arch to go outside of the U.S.?
Yeah, we've certainly seen big demand for our product in Europe, the UK, as well as certain parts of like Asia and the Middle East. For us, I think the beauty is like the asset, like Bitcoin and Ethereum, are the same regardless of like where you live, and the underwriting is the same, the custody is the same, and so for us, we are certainly looking at supporting international expansion. We just need to make sure that we are legally compliant in the various jurisdictions that we operate, and so that's currently the blocker, is just outlining a path to creating entities in various geographies, as well as making sure we have the appropriate licensing should there be needed to go live there.
Sure. And are there any other challenges besides the compliance aspect?
I think that's the main thing to be considerate of. And then other challenges are, go to market, acquiring customers, and just because you go live in a certain state or a certain country doesn't mean everybody's going to start using you. And so that's another thing to always figure out.
Awesome. So in terms of Arch Lending's unique approach, can you compare it to some of the other lending platforms that are out there, and really what makes you unique and different?
Yeah, I think like at a high level, other folks, I'll keep this US centric, just given the audience here. In the US, for individuals, currently really only have us or Unchained or Salt Lending. I would say are the three. For us, like we strictly don't rehypothecate. And so I think that's like a difference between us and Salt Lending. But against Unchained is more so Bitcoin only, and they've actually temporarily paused loans to individuals. And so for us, we're broader than Bitcoin with Bitcoin Ethereum, and we support Lido wrap-stake Ethereum today as well, and are continuing to sort of evolve as a platform beyond just lending to support staking, trading, and other sorts of activity as well. And so I think our crypto lending product is unique with respect to the fact that we don't touch customer assets and go beyond just Bitcoin, but also like we're competitive on the interest rate, competitive on the structures of loans that you can do, as well as the duration that you could do. And lastly, I think what sets us apart is just a long-term vision of wanting to be the full stack service provider for our customer base.
That's great to hear that you have a vision beyond just the lending. And what are some of the, I guess, sooner opportunities into where Arch Lending can really go in this space?
Yeah, I think we've already started. Like 3 weeks ago, we launched a custom product that enables our customers to access BitGo custody. They can do trading and staking there as well on the Arch platform. And then I think for us, like as we continue, we want to offer investment products and structured products to our customers, allowing them to maybe invest in well-known hedge funds, private equity funds, as well as maybe have more structured leverage products, so you can borrow against your Bitcoin to buy more Bitcoin. And we do that in a simple way so that all of it is abstracted away from you of that sort.
Great. So to shift gears a little bit here, as a founder, talk a little bit about the culture of Arch Lending and really the type of people that you're looking for when hiring or bringing people into the company.
Yeah, I think there's really like a few key things that we look for. One is just prioritizing the customer above all else, right? Like obsessing over their needs, like what we can do better in every set of the word. What else are they asking for? We get on customer calls, frankly, all the time with new and prospective, as well as existing customers, to make sure that we're really building products that add value to them and show them that Arch is there as a trusted partner. The second is sort of ambition. Like we're here to build a really large business and have a big goal set out for us. And so we want people that are excited by that and equally ambitious. And then the last is just high integrity, making sure that we do not, like for us, it's a core that we don't touch customer assets. We don't rehypothecate. We don't do things of that sort because we want to earn customer trust and really like that's why we get usage. And so making sure folks are equally on board there with respect to their actions and how they operate. And then the last is just like always hiring for like what I call like Y-intercept over anything else, which is just like the slope of an individual with respect to how they're progressing in their career.
Perfect. So with 5 minutes left, I wanted to ask you, what are you most excited about in the upcoming year for both the market as a whole, but also for Arch specifically?
Yeah, I think there is a lot of things. I'll talk about like crypto lending specifically here. I think there's a lot of exciting things in the next year. One is obviously the whole ETF approvals, but you pair that with, and what that really does, right, is it enables like the BlackRocks of the world and Fidelity that are applying for these. They have trillions of like assets under management. So even if a very small percentage of this ends up flowing into these ETFs, which is reasonable to expect, that does bring a lot of capital into crypto and sort of helps legitimize the asset class even further. And so I think for us, it provides tailwinds to lenders just because there's more people holding these assets than ever, and that just becomes a bigger sort of demand. That's, I think, one piece that I'm specifically excited about next year is just watching more and more institutions and individuals sort of adopt the ecosystem.
That's great. And then just a follow-up to that, with more legacy, players in and trying to explore the space with on-chain assets. Can you talk a little bit about the advantages that that Arch has currently, and how you will really compare it to some of those institutions?
Yeah, we've actually talked to many legacy folks about powering lending for them. So I'm not sure whether it plays out all the legacy folks start doing lending themselves, or they work with folks like us to essentially power lending for them. With respect to like how we see ourselves and like our advantage, I think like the software experience for anyone that's gone through our website to create an account and really configure your loan, you'll see that it's sort of miles ahead of the experience that you may traditionally be used to with financial services. There's no like paper loan documents that you need to sign. There's no sort of like hidden fees that come across. The dashboard is actually incredibly accessible. It's easy to figure out how to make a payment online, things of that sort. The team is really accessible when it comes to customer service. And so I think those are like the core tenets that set us apart, and hopefully will continue to set us apart as we grow.
Amazing. So, for everyone that listened, thank you so much. I mean, Dhruv, this was an incredible conversation. I know I personally learned a lot, and hopefully everyone else too. So, for those listening, this was an amazing conversation with Dhruv Patel, who's the CEO of Arch Lending. And, thank you to my co-hosts, Noah Pollack and Jackson Blau, as well as, a frequent guest, Dr. Robert Murphy, for what he spoke about in the beginning. We are doing this every Tuesday at noon Eastern. So, we're going to continue to have great guests. It's I'd say that Dhruv set the bar pretty high in terms of guests that we can have, and just, intellectual conversation around the space and lending and collateralization. But Dhruv, would you mind telling the audience, how people can find more information about Arch and yourself?
Yeah, certainly. So for myself, happy to sort of connect here on Twitter. My DMs are open for folks that want to talk further. You can find us online at archlending.com. From there as well, we have a chat functionality where you can talk with folks on the team. I'm quite active there as well. And so feel free to reach out to me or Arch in any of those aspects. Arch itself is also on Twitter at Arch Lending. And so that's another avenue as well.
Amazing. And then from the Infineo side, highly encourage you guys to follow the podcast of our own Dr. Robert Murphy. He drops an episode every single Friday with incredible guests around the economic space, blockchain, real world assets, technology like AI, and different things. You can find that on YouTube. Additionally, if you want to reach out to Infineo or learn more, you can do so through our website, which is infineo.ai. My name is Alec Beckman. I am your host, and you can reach out to me directly on Twitter. My name is Alec Beckman, or you can feel free to email me at alec.beckman, BECKMAN, at infineo.ai. And just really appreciate the conversation. Thank you again, Dhruv, and thank you to all our listeners.
Yeah, thank you.
Yeah, thank you, Dhruv. Thank you, everyone, for joining us.